Oliver, it's almost the weekend. Let's pretend we're at an extremely boring dinner party and we're going to talk about London property prices. In particular, lots of sort of yelping about the fact that prime real estate in London is booming and prices are being driven through the roof by overseas buyers looking for haven investments. Is that something you see in the data?
Yeah, certainly the prices seem to show that. While much of the London property market is flat or slightly up this year, the prime central London market is up about 10%, and that's the continuation of a trend. It's carried on growing quite strongly since the crash a few years ago. But a lot of that, as you say, is driven by overseas buyers. There's the traditional buyers from the Middle East and from Russia. They're joined now by people looking for a haven from Europe, from the Eurozone crisis. In 2011, it was the Greeks. It's not so much the Greeks anymore, but there's a lot of French, a lot of Italians, some Spanish, and even some Germans looking to park their money in central London prime property. So it's certainly the popular place to be this year.
It's a sort of interesting thing, isn't it, for people as old as you and I. We vividly remember the crash in the 90s. So you'd think one London property may not be as much of a haven as you think. But also, if European investors in particular are trying to escape the possibility of a euro default or the euro collapsing, you'd think, why do you need to be in prime London? Why don't you buy something elsewhere in the UK? Or indeed, why don't you buy something in the periphery London? Why go prime, do you think?
It is a strange one. The agents say that a lot of them are attracted by the London's position geographically. It's quite convenient to get to from all areas of the world. The time zone's quite good. The language is quite easy. But financially, often it doesn't seem to make an awful lot of sense. Rental yields aren't great, about 3.5% in prime central London. So there's not an awful lot of yield to go on. So a lot of them maybe are looking for growth if they're not looking to live there themselves. And you have to ask what the future is, whether property prices can continue growing as they are. Certainly, if some of this Eurozone money comes out, there's potentially quite a long way for prices to fall. There's not a lot of local support for this pricing at this level. The average Londoner earns about £34,000, and the average London house across the board is about 10 times that. The average prime house is 27 times that. So there's no one locally really who's going to be interested in that. So if any of this overseas money starts to fall away, there's potentially a big gap.
And the irony, of course, is if England's following any path at all, it's probably more in line with deleveraging Japan, and we all know how those property prices, even in central Tokyo, fared. I mean, if London was similar, we've got a long, long way to go in a downward direction.
Yeah, there is a long crash to come if we follow the route that Tokyo took, and there's no reason why that shouldn't happen. Another concerning thing on the horizon is that there's a lot of development going on. A lot of people have noticed the popularity of prime London, and there's about £38 billion worth of development going into the London market now. That's a lot of new supply coming on for demand that might not hold up quite so much.
Well, I guess if there's irrational demand at silly prices, we're going to build stuff for them. So let's see how it goes. Thanks very much, Oliver.